chart isn't looking great, but there is some good news. We bounced off that key level over here at 20,600. We bounced off that level, which is amazing because the next level down from there would bring us to about 18,300. And if we drop that, then we're going back down to test those lows. So that's on the bad news. I'm going to show you some good news in the chart during the show. And I found the narrative that crypto has been looking for. So you know crypto is driven by narratives. Well, we've had the interest rate narrative driving crypto for the last couple of months. We had the inflation narrative, then the interest rate narrative. Well, I've got the new narrative, and I'll show you today what crypto is responding to. So it's going to be big. It's going to be fun. It's going to be packed with alpha. Let's do it. Let's do it. Let's do it. I woke up this morning, I look at the Bitcoin chart, looks something like that. Not great. I mean, you look at that, you say, okay, hold on a second. This is not great. We broke through this trend line. We're no longer on the way up to 28,000. We just held the support. And then if you look at the weekly, this is where it gets a little bit more depressing. We closed under that 200-week moving average again. And you don't want to be spending too much time under that 200-week moving average. So we're going to talk about that today. But there actually is some good news on the horizon. But that's not the story. The story is that I woke up and I read this tweet. And it says, the bad thing about this dump is not the dump per se, but rather that due to its magnitudes, charts are now broken. The trend is now back down. Underwater traders will be looking to sell at break even. And trend traders will be looking to sell rallies. Not a one-way street anymore. Anyway, then I went back to bed for like 2 hours. And now I'm back and I'm here and I'm ready to do a show for you guys. So yeah, we're here. Let's do it. Let's do it. Let's do it. I'm here. You're here. Let's do what I'm going to do. I'm going to bring you an alpha packed show, the most alpha packed show on YouTube every single day of the week. And you're going to do what you do, and that is subscribe to the channel. If you're not already subscribed, if you're not part of the 95% of people that subscribe to our channel and watch the show, well, then subscribe and hit the bell notification, because then you'll know when we come into you live. We've got a big show today. We're going to be talking about some hope in the charts. I'm going to show you the new narrative that crypto is actually responding to. Remember I said to you, you know this, crypto is all about narratives. You've been here for a long time. Anyone who's been here for any amount of time will tell you that everything in crypto is about narrative. So like we zoom out and say, okay, what were the narratives actually driving everything here? And if you look from like November, and we just get on to a different, there we go. If you look at this narrative here, this narrative was all about inflation. And then we kind of broke out of this trend of inflation. And I said that the market is now looking for a new narrative. And we've got a new narrative now. Now we've got to be following this new narrative, because I think that like a narrative is like a puppet master for crypto. So like what happens is like the narrative decides which way crypto goes, because the market starts focusing on like one thing. And that's the thing that drives the market. So now it's no longer inflation, because that is like an old narrative. So I got a new narrative for you guys. We're going to be talking about that new narrative today. Also some altcoins. We're going to be talking about some altcoins that maybe went down a little bit too far. But I guess the thing we got to discuss today the most is this a drop down to the lows and maybe even to test new lows? Or is this just a little bit of a pullback in a market that was a little bit too heated? And maybe the pullback was a little bit exaggerated. So we're not going to speculate. We're actually going to look at the data and decide using the data. Someone says the audio is somewhat crappy today. So is that true, James? Is the audio somewhat crappy today?
Much louder.
Okay. I mean, I can make the audio louder for you guys.
Speaking.
There we go. I can make. How's that? 1 2 1 2. I think the audio is a bit better now, right? Is the audio better? Let me know. Someone says I'm sweating on my phone. I don't think it's sweat. I think it's just there's so much light in the studio. It's amazing. All right. So how's it going? Is this good? Audio is good. Everyone says audio is great. Amazing, amazing, amazing. All right, let's go. Let's get into the data. Sounds fine to me. Audio is good. Was better before. Okay, was better before. Turn it down. How's that? Working fine. Fine here. We don't want fine. We want good. We want good. We want good. We want good. Let me just get the settings right here. All right, let's quickly look at where we're at. Let's quickly just really take stock of where we're at, so we're all on the same page. So we had a few things happen. As I said, the first thing that happened was we broke this upward trend over here. We came down. We're now really testing this support level over here, which is at about 20,850. We bounced off this support level over here, which is quite encouraging that you can see we just touched that support level. Let me make it a little bit bigger so that you guys can see it, because I know not everybody is watching on their computer. So many screens in the studio, and to try and get these charts to work is a nightmare. All right, for those, so we bounced off this little support line over here. Let's try, there we go. Let's see if we can get that up like that, and we'll get that up like that, and there we go. The bad news is that if we break this level, then we're going to go down and probably test this level over here, which is between 18,800 and 19,000. And if we break that level, then we're going down to the low. So we've got to keep our eyes open for that. It's not impossible, but it's important that we understand how we got there. As I said also before, the other thing that's not great is that if you look at the weekly and you look at the 200-week moving average, we closed below the 200-week moving average again. So you see we closed just below the 200-week moving average again, which is, again, not great because we've got this long-term trend that Bitcoin has been on for forever. And we don't want to spend too much time under it because then it could invalidate the trend. So we did break up above it after 5 or 6 weeks of being below it. Now we're back down above it. Hopefully we'll close above it this week. Let's look at some other things that are happening. I mean, the one thing that could get us to bounce harder than this bounce over here is if stable coins get onto exchanges, right? So if stable coins get onto exchanges, that's usually a sign that we're going to get a bounce. So that's the first go-to place that we go and look at. Problem is that right now, if you look at all the different stable coins on exchanges, none of them are actually bouncing. So none of them are actually bouncing. You can see that here and here we've had a slight bounce, but none of them are actually bouncing, which is usually quite a bad sign because what happens is usually people put stable coins onto exchanges that they can buy the dip. In this case, no one is putting stable coins on exchanges and no one's getting ready to buy the dip. What's causing this dip? Well, remember I said to you that the NASDAQ had run too far, in my opinion. It ran way too far, in my opinion. I showed you guys that it went up 20% in a month, and now basically it's starting to come down. And what you can see here, well, at least for me on my chart, is that we've now broken this little, I thought we were going to maybe just retest this line. And so now it's pretty critical that we start bouncing off this if we want to stay above this line. I don't know if we're going to stay above this line because, as I said, the NASDAQ had run 20% in a month. And I think it needs to come down. I think 10% in a month would have been a little bit more realistic. And September is not a good month for stock markets. If you look at it traditionally, July and August, everyone's on vacation. And when they come back in September, usually that's when they start trading. And usually July and August are low liquidity months because everyone's away. Come back in September, it's back to business as usual. And if you look at what September looks like, that's the record for September. So the good thing is that you don't really get many huge crashes in September, but you can see that traditionally in the markets, it's usually a red month, for markets. For crypto, it hasn't actually been such a bad month. It hasn't been such a bad month. In fact, it's been more green than red. But also, remember one thing. Remember that we haven't been as correlated to stock markets in the past. This is the first time that in the history of Bitcoin and crypto that we're as correlated to stock markets. So it should be a very interesting September. Remember, the Fed meets again at the end of September. Before that, you've got the inflation numbers. And this week, you've got some very important inflation numbers, which we'll talk about in a couple of secs. So what happens to crypto? Well, because we're so correlated to NASDAQ goes down a little bit. Crypto goes down way too much. Why does that happen? It happens because in crypto, I think, again, we're leveraged. We're leveraged like degens. That's the problem. We all went leveraged into the ETH merge. So what happens when the market goes down a little bit? Well, all the leverage trades get liquidated. Fred, all of his friends, get liquidated. That's what pretty much happened. And you can see it. You can see it in the stats. So if you look at the numbers here, $562 billion worth of traders were liquidated last week when the market came down. And if you look at this, this is the biggest liquidation since the Three Arrows Capital liquidation. So it's crazy. Why did this happen? Well, it happens because crypto traders are long leveraged degens into the ETH merge. Remember how much leverage there was into the ETH merge? Everyone going, buy the merge, buy the merge, buy the merge. And I said to you, I made a show for you guys, and I said at one point, I said, that's it. Don't buy any more ETH. That's it. You've missed the ETH merge. That's when ETH started to come down. Exactly. Go and look at the data on the video. So that's what's happening. There's an unleveraging because of this ETH merge. It's not bad for every token. So remember that there are tokens that really get hit hard. Let's look at some of our favorite altcoins. So let's just get some of the altcoins here. You can look at tokens like, take Phantom, for example, right? So let's look at the daily on Phantom and just see how much it's come down from its recent highs. Hold on a second. Let's get okay. So let's quickly take Phantom from the highs and bring it all the way down to where it is today. Phantom's down 31% from its highs. Near Protocol, one that we have been watching, also down quite a bit from the highs. Maybe an opportunity here ahead of Neocon. This is one that I'm going to be trading in the competition. I'll show you in a second. Also 35% down. But there are some tokens that actually aren't that far down. Let's take a token like GMX. So GMX is one that we should be talking that we should probably be talking about because it's had an amazing run. It has come down. Let's take it from there. Also it's about 27% down from its highs. But I want to show you something interesting here. So remember we said that this bull market or this run is driven by protocols that are actually being used. And when we get mass liquidations, what we saw with GMX was that traders in GMX also got liquidated. And when they got liquidated, it actually drove up the fees of the protocol, right? So again, this is like you're buying into a decentralized protocol here, a decentralized trading derivatives protocol. And interestingly, we've been looking at it for a while, but interestingly, if you look at the GMX revenue numbers, the fees, if you look at the 7-day average fees, look where GMX ranks in the order. So obviously Ethereum is the highest, and then of course Uniswap is just under that, and then BSC because it's used so much, and then Aave and ENS and Bitcoin. But I mean, look at GMX and where GMX fits on this list. It's one of the highest in fees. In fact, it would come down to, if you took it on a 7-day average, it would come down to like 5th place in terms of fee generation. So if you're looking for a good stable protocol that is being used a lot by traders, this is a good one. And there are a couple of other GMXs coming online soon. We're going to be announcing 2 or 3 of them that we know are coming online soon, and maybe we'll give you great investment opportunities. Also, as I said, we are invested in GMX as well. So one that we've been looking at, it's been on all our buy lists. I mean, interesting point here. It's been doing more swap volume. For 2 weeks in a row, GMX has been doing more swap volume than Curve. And Curve is huge. And that's on Arbitrum. So you can see that is absolutely huge. Raoul Paul, as he said, he says, look, so I think I'm in this school of thought. I'm in Raoul Paul's school of thought. You got to take a very good look at where you're at now and decide whether you think that we're going down to new lows or whether you think that this is just a dip opportunity and time to buy the dip. The narrative for me is too bearish. And when the narrative for me is too bearish on crypto Twitter, for me, that's usually a buy the dip kind of scenario. So I'm taking the view that this is a buy the dip kind of scenario, and it's the same view that Raoul Paul's got, and I'll show you why. He says, the cheeky pre-merge shakeout I see it. I don't expect new lows, but most likely a gut check quick drop. But let's see. New lows equals keep adding for me as 2-year risk reward gets really attractive. There's a 50% downside and a 10x possible upside. So your risk return is 20-1, and that's kind of how I see the market here. We may go down. If you go down, even if we go down to 12K, which is what Carl Dupes, the bear, is calling. Where's Carl Dupes today?
In a meeting.
He's in a meeting now because he has his own show. So he's high and mighty now. So he's in a meeting. So either we're going down to 12K. If we go down to 12K, cool, you got a 50% downside. But the 2-year risk return is, like Raoul Paul says, probably a 10x. And so your risk reward here becomes 20-1. So this is, you got to make a decision as to how you see the world. Either you think that we're going down to new lows, in which case you probably want to be waiting, or you say, hold on a second, this is just a dip. The NASDAQ went up a little bit too far, a little bit too fast. Now it's starting to correct. We've had a couple of down days on the NASDAQ. Here we are again. We have down 116 points. I think the market opened about a minute ago. So here we go, 116 points down on the CFD. Respect the dupes. Everyone says respect the dupes. I wonder where he's doing in the trading competition. And let's see. Yeah, so that's, you got to pick your narrative. I'm of this school of thought where I don't think we're going to go down to new lows. Hey, maybe we'll go down just under 17,000. Who knows? But for me, the risk reward, if I'm looking on a 2-year time horizon, well, that's what I'm looking for. And for that type of time horizon, I don't think I'm going to have many of these kind of opportunities. And that's why I'm dollar cost averaging aggressively every single day. Every single day. Who's winning the trading competition? We're going to talk about that in a second. I'm going to show you my portfolio. I'm going to show you what I did right and wrong. Well, you know what I did wrong? I listened to Sheldon, which is a mistake. Sheldon didn't even come to work today. That's how far down he was in the trading competition. He didn't even come to work today. Didn't even arrive here. Gave Carl his slot. Yeah, I know you guys all agree with my narrative here, which is the risk reward is good here. This is not a market that's going down to that. The risk reward where we are right now is good, regardless of whether it's the bottom or not the bottom. The risk reward is pretty good. All right. I do want to show you one chart, and then I'm going to show you what I think is the new narrative that's actually driving the market. So I did see a chart earlier today, which someone sent me. One of our researchers sent me today. And I think it's a chart that we need to be looking at. So the chart we need to be looking at is specifically this chart over here, which shows you the 10-year yield minus the 2-year yield. So if you take 10-year debt and you subtract, and you get the yield on 10-year debt, and you subtract the yield of 2-year debt, and what you can see, they call it the inverted yield curve. So for those of you who are hearing about this for the first time, what is an inverted yield curve? It is when you are more incentivized to lend out your money short-term than you are to lend out your money long-term. So, usually when you loan out your money for a long-term loan, say a 10-year loan, you get incentivized by getting more interest, usually. But in rare cases, in fact, in very rare cases, COVID, the great financial crisis, the dot-com bubble, the yield curve inverted. And an inverted yield curve usually means that we're near some kind of bottom. So you can see what happened with these things. Usually it means that we're near some kind of bottom. It means that we're usually in some kind of crisis where people believe that the 2-year yield is going to be higher than the 10-year yield. So that's where we are today. Someone sent me this chart. One of our researchers, Joseph, sent me this chart and showed this to me. So it's important to watch this chart. But this is not the chart that crypto is responding to right now. And this is where I think we find ourselves the narrative where the market is what the market is responding to. And remember, as I said to you in the beginning, narratives are super important in crypto because they drive the market. The market becomes obsessed on one input, one narrative, and one chart. Up until now, it's been interest rates. The narrative has been interest rate. What will Fed do about interest rate? But now the narrative is changing. And it's, although somewhat related to interest rate, it's actually not interest rates anymore, but it's more this chart over here, which to me is pretty scary at the moment. Pretty scary at the moment. We've got to be watching this chart super closely. And that's the Dixie. So if you look at the dollar index, right now, the dollar index is on a tear. In fact, the dollar index is 108.5, and it's been an insane run for the dollar. And I'm going to just get my line here a little bit more. There we go. So if you look at the high for the dollar index, if you remove that wick, the high for the dollar index is around 108.75, and we're now at 108.5. And a lot of people think that the dollar is going to smash out of this high. And if a dollar smashes out of this high, it means that the dollar is getting very strong. And anything priced relative to the dollar, stocks, Bitcoin, silver, gold, will start going down. And if you look at when the last time that we had the dollar index at these kind of levels, it was around 2001. Now, there are two reasons why the dollar index would be so high. The first reason why the dollar index could be so high is if the US interest rate was so high relative to the rest of the world that people wanted to invest in the US dollar versus any other currency. That's usually one reason why the dollar index would be as high as the dollar index is today. But that's not the case now. The case now is very different because US interest rates are pretty low relative to the rest of the world. The reason why the dollar is getting so strong is because of their situation in the rest of the world. When people look at the rest of the world, they look at things like emerging markets and they say, well, the emerging markets can't even repay their debt. Some of them are on the brink of defaulting on their debt. And we're starting to see this in all emerging economies. Why? Because the dollar is getting stronger. And so people are saying, hold on, I rather want to be holding dollars. I don't want to be holding emerging market currencies. I don't want to be holding euros. Look at the euro. Remember, we had the euro test parity the first time. That was like a little knock, knock, knock. And then you had a little short squeeze over here where they were short covering. And it kind of looks like this time around, we may actually get the breakdown. And if we get the breakdown, you're going to get a euro that's cheaper than a dollar. And we haven't seen that in a long, long, long time. So the dollar is getting really, really strong. And to me, this is the narrative that's now driving the market. It's the strength of a dollar. And the scary thing about the strength of a dollar is that it's no longer related to interest rates in the States. It's just because people want a safe haven, and people usually want a safe haven when things are breaking down. So if you want to be watching something to see whether the crypto market's going to be succeeding or not, whether we're going to get back into a new market, a good narrative or a bad narrative, look no further than this dollar index. Keep your eye on the dollar index. This is like the puppet, like the strings that are pulling that pull the puppet. So this is like the strings that are pulling the puppet. Right now, dollar index goes up, markets go down. Dollar index goes down, market goes up. If you look at the last time that if you look here, look at this. The last time that the dollar turned here, 14th of July, 13th of July, right? That's when the dollar started to come down, right? 13th of July. Let's look at what happened on the 13th of July. Well, the first thing that you'll see, probably if you go here, so 13th of July, here we go. The euro started to strengthen, obvious. But let's look at what happened to the markets on the 13th of July. So let's go back to July over here. Let's go back to 13th of July over here. Exact point when the market turned. You see that? Exactly. 13th of July, bang. Exact point where the market turns up and runs up 20%. Let's look at what happened to Bitcoin around the 13th of July. So let's go to Bitcoin and let's look around 13th of July. So you can see the correlation and what the market is responding to now. It's no longer interest rates. Yeah, interest rates is still in the background, but right now everyone's talking about the dollar. Let's look at 13th of July. Where were we on 13th of July? 12th of July. It's about there. So Bitcoin was at 19,500. See, so that's what it's all about now. And it's not about the dollar going up because of interest rates. It's the dollar going up because China is an absolute mess. The Eurozone and the Eurozone inflation is an absolute mess. UK is an absolute mess. And people are rather saying, look, we would rather be in US dollars than anywhere else. And actually, Mike McGlone, when he came on our show a while back, the Bloomberg commentator, he said this was going to happen. He said the Dixie is just going to carry on going up and up and up. That's probably right. Remember, Gareth was actually long Bitcoin, short the Dixie. I want to get him back on the show. In fact, let's get him back on the show. Fred, let's get Gareth back on the show. Let's get that happening. What else is happening this week? Let's quickly see. What is happening this week? Oh, we have a big week this week. It's actually not a small week at all this week. Look at this. So the first thing we have this week, well, I mean, we have a whole lot of blah, blah, blahs, but the main thing that's happening this week is this line over here, which is core PCE, which is the measure of inflation that the Fed actually prefer using. So PCE is like CPI, it's like the consumer price index, but it's adjusted for crazy fluctuations in fuel, oil, and energy and food. So that's kind of like what it eliminates. And it's probably the more realistic measure of how consumers are being impacted. Now, that comes out on Friday. So on Friday morning, we're going to get the PCE data. And as TED Talks Macro says, he says, the Fed, it's the most important data point to determine the Fed's action going forward. And the reason why they say that is because here, the Fed said the participants in the previous meeting observed that inflation remained unacceptably high and was well above the committee's longer run goal of 2%. In light of the CPI reading, participants noted that the PCE inflation was likely to have increased further in that month. So the question is whether PCE inflation has actually peaked. That's what the Fed's actually looking at. Now, remember that the biggest thing that brought down inflation was the price of oil and other energy that came down. But the government kind of, well, as usual, the government kind of hacked that. The reason why they hacked that was because what they've been doing is they've been using the oil reserves, which the US has these things called strategic oil reserves. They're usually to be used in times of war, in times of exactly what's happening now. And what you can see is that the reason why the oil price managed to go down despite the war in Ukraine, etc., is because all they've done is they've liquidated the strategic petroleum reserves to levels not seen in the last 35 years. Now, the scary thing for me is if you look at how fast these have come down. So they've come down in the last year from 700 to just under 500. And if they carry on like this, the US is eventually just going to run out of these strategic reserves. And so you can't keep the prices down. And so we're getting PCE on Friday. We need PCE to have bottomed or to have topped, basically. We need the PCE inflation to have topped. And that's why Friday is such a big day. And remember that straight after that, Jerome Powell actually starts speaking. I think it's about 1 o'clock EST. Jerome Powell actually starts speaking. So this Friday is actually a massive day. If the PCE inflation has done an about turn and we start getting a drop in PCE inflation, then we are absolutely good and the market goes on a rally. If that goes up, then we could get another leg down in the markets. Let me know what you think in the comments. Let me know what you think, whether we're going to get... What is your prediction for Friday? What's your prediction? I'll tell you my prediction. My prediction is... I'll let you know at the end of the show. Let me think about it. All right, lovely show, guys. You almost forgot to smash the like. Smash the likes, please, guys. I'm free. I like you, man. I like you. All right, let's see what else is happening in the market. Oh, I'll tell you what else is happening in the market. Hold the phone. Stop everything. The Cardano Vasil fork is finally underway. Believe it or not, finally, after all that, we got the Cardano Vasil fork happening. So, you know how a fork happens. Basically, you need all the miners or the SPOs, as they call them in Cardano. You need them all to upgrade. So the SPOs, these are stake pool operators, effectively. These are like the validators of transactions. Multiple stake pool operators have done a variety of tests of the latest Cardano node 1.35.3 with everyone reporting back error-free. Now it's time for full SPOs to upgrade. Once 75% of the network is at 1.35.3, we go for Vasil. So it's happening. It's like we're in the process of the long-anticipated, long-awaited Cardano Vasil fork, which has been delayed for a long time. And hold on a second. Don't know if you guys followed what happened this weekend. What a shit show. What a shit show this weekend. So it starts like this. You get this guy who is a Cardano SPO or related to Cardano, this guy Adam Dean. And he publishes this thread that said Cardano is catastrophically broken due to a bug in Cardano node 1.35.2. And this was the most dramatic thing that I've ever heard. Okay, the most dramatic thing that I've ever heard, especially where he says, "I got to show you this. I have to show you this." Okay, to say that this level of rushing gives me uneasy feelings is an understatement. It feels like he's getting into a relationship. If there were a nuclear clock for Cardano, we got perilously close to hitting midnight, and then Cardano would turn into a pumpkin. Okay, so. This is what happened. And then everyone, YouTubers and everyone else, they started to publish all these headlines. Okay, now I get it. I know, because they're all playing the YouTube algorithm. Because what YouTube says is, can you get clicks? What's the best way to get clicks? Just Cardano broken. This guy must have got a ton of clicks. Cardano broken gets a whole lot of stuff. Truth is, the testnet was not broken. There's a reason why you do a testnet. The reason why you do a testnet is to testnet. Okay, so they did the testnet. During the testnet, they found some vulnerabilities, and then they decided to eliminate the vulnerabilities and to continue with the software as it currently stands. But that wasn't before we had a whole lot of a whole big rigmarole on the weekend, and Charles had to come up on YouTube and clarify everything. And I think he's right. I think Charles is right with all his comments. Let's just listen to
around. And I just want to be super clear, because it's a very unfair narrative that's floating around right now. and it's incredibly corrosive and damaging, and it's got to stop. Let's be clear about process here. How it's always worked with these hard forks from Shelley on has been that a testnet is spun up or some form of testing surface, an extensive amount of testing is done. There's an ongoing dialogue between the stake pool operators, exchanges, and now dApp developers, and people from the Cardano Foundation, and people from Emergo, and people from Input Output. There are people whose day job it is to
so
engage.
that's how you started it. And then you went on. I'll play you some more, a couple of more aspects of this or elements of this, which I think were quite good.
That's been true throughout. 135, we believed on our side, was going to be the node that we could hard fork from as a final series of tests. As we've always done, the testnet was hard forked. It existed. People started integrating with it. And then it was discovered that there was a critical issue in that node, the elliptic curve implementation. And that broke the testnet. Now, had to fix it. And there was a series of back and forths and discussions and additional testings and layers of work that was done, which resulted in the cutting of 135.1 and 135.2. It was discovered that there were still some
So long story short, they discover this vulnerability. They decide to bypass the vulnerability in the code, and everything's fine. But you know how Twitter is. Twitter makes a whole big noise about this. Everyone starts publishing testnet broken, etc., etc. Charles publishes this long tweet thread. I'm glad to say that it seems like everything's good, that the Vasil fork is now pretty much officially underway, because once the 75% of all the SBOs upgrade to the new software, well, then the Vasil fork actually is underway. So I'm glad that's over. And I'm glad that people realize that a testnet is exactly that. It's a reason to test. That's why it's called testnet, and that's when you're supposed to find vulnerabilities, and they did, and they found it, and they fixed it, and it's all working. 135.3 is actually working, so nothing to worry about there. I will change from light mode to dark mode. Are you talking about Twitter or YouTube? Let me know. Okay, I mean, I'm happy to change both. I should change both. Okay, I'll change both. From tomorrow, we'll do that. All right, if you want to be buying NFTs, this is probably a good time to be buying NFTs, because what we're seeing that finally the NFT market is waking up to the fact that they also can get liquidated. And we're watching it happen with BendDao. I don't know if you guys have been watching this whole BendDao thing. Now, what is BendDao? BendDao is a lending protocol against your NFTs. So what you do is you put your NFTs on BendDao, and you can borrow against the floor price of the NFTs. That's pretty much how it happens. Problem is that BendDao has two rules, okay? And the rules are that it requires the bids to be above the debt of the borrower and above the OpenSea floor times 95%. So to bid, and also to bid, you have to lock up your ETH for 48 hours. Now, people don't want to risk their ETH for 48 hours, and there's no bids for these NFTs at 95% of the OpenSea floor. And so right now, there's been a run on BendDao, where there are a whole lot of NFTs. The lenders are now having to pay huge lending fees. They probably have to pay about 100%. It means that NFT borrowers pay 100% interest on their borrowed ETH. So it's like, imagine you pledge your Bored Ape, which you paid, I don't know, whatever the floor was, 200 ETH, 300 ETH you paid for your Bored Ape. You put it on BendDao and you borrow, say, 100 ETH or whatever the loan to value ratio is. And now the thing is, you're paying interest of 100% because there's been a run on BendDao. And so now we're starting to see that the NFT market is actually also starting to collapse, which I think is a pretty good opportunity. It shows that, you know, if you want to be buying Bored Apes or Mutant Apes or any one of those collections, or in fact any collection, I think what you're going to do now is you're going to realize that there may be some great bargains, because we're starting to see some huge liquidation. So if you were sitting on the side and you were contemplating whether or not you should be buying these things and just looking for something to go down, well, do it. Now's probably a good time. Someone says here, bend down over, or bend down. You guys are a bunch of teachers. You guys are an absolute bunch of teachers. That's pretty much it. I mean, I did see this. And I think it's true. Like I agree with this guy. You know, we got the ETH merge coming up, and this merge has been in the works for years. It has been in the work for years, and no one ever spoke about what would happen if there was a sanction like Tornado Cash. And he says it's insane to me that the ETH core devs on a call a few days ago was a bunch of team members freestyle talking as if there was some new issue and they had to consider and think of a response. How did they not think about this? I mean, it was purely obvious. And I think that this has put a huge dampener on the ETH merge, this Tornado Cash situation. And the sanctions that were imposed by OFAC on Tornado Cash, I don't know if they were coincidental. I don't know if the timing was coincidental. I don't know if OFAC said, okay, well, look, we know about this. We've been wanting to sanction Tornado Cash for a long time. How about we do it 1 month before the merge? And we test the real decentralization here. We make a point around whether it is really possible to have a decentralized proof of stake protocol. Because remember, unlike proof of work, with proof of stake, you choose which transactions you want to mine. Now, you can choose which transactions you want to mine on proof of work, but on proof of stake, there are much bigger implications if you don't validate certain transactions. And so, I don't know. I've got the skeptic in me. The skeptic in me thinks that there's something bigger at play. There's something bigger at play. That's what I think. All right, how am I doing in the competition? So I'm not doing well. Why am I not doing well? Because I took that, I dropped all, I would have been number one, but I dropped my shorts because I listened to Sheldon. And so where am I now? I'm still holding longs. I think now my strategy is I'm going to wait for a bounce. So I'm now ranked 464, but I'm waiting for a bounce. When the bounce comes, I'm going to take it. So I'm not going to go short because I think the risk reward on the short is not good right now. The risk reward for me is not good on this trade. So what I'm going to do is I'm going to wait to convince myself of a bounce. I'm going to look for signs in the NASDAQ, and then I'm going to go on the long. So I'm going to try and catch the long on the way up. I've got money sitting in the account. I'm still pretty much close to even, and I'm ready. I'm going to take a leverage long as soon as this happens to get me up in the competition. Someone says you're laugh. You can't blame Sheldon do your own research. I know, but have you ever sat in front of Sheldon, bro, and you see his eyes lighting up and he says, I'm going long rune, and then he goes long rune. You see, I'm waiting for this bounce, and I think this bounce is coming. And then I'm going to go all in on the bounce. Got to watch this NASDAQ. That's the problem. Got to watch this NASDAQ. Let's see what's the S&P doing. Let's see what the S&P doing. Because the S&P might also give you clues. Also down 1.35%. I think I'll wait a little bit longer, and then I'm going to start leveraging my longs in, and we will get a bounce. When we get the bounce, that's when I'm going in. Remember, if you want to join us, there is another 2 weeks, I think. Let's just quickly see what's going on here. So you go to this link over here. You can click. You got to sign up with the Crypto Banter referral link. Click it here, and you'll have to just press the register button. There's 2,393 of us. Just remember that if we get to 2,500, which is very, very close, very, very close, the prize money goes up for everyone. So it goes from 50,000 to 55,000. So I don't know, probably pretty much worth doing that. Another thing which is pretty much worth doing. So there's about 100 people that have taken out these CoinStats memberships. This is the software that allows you to put all your wallets and your exchanges in one application. Remember, if 200 plus people take out a membership between now and the end of August, then one lucky winner will win a full Bitcoin. So, I mean, that means a 1 in 200 chance of winning a full Bitcoin. So, I don't know if you've ever thought of buying this, I would go for it. Let me know in the comments what you think I should be going long into. I'm going to go long Solana. I'm going to go long Nia. I'm going to go long Matic. And I'm going to go long Rune. Let me know what you think. Waiting for the bounce. I'm waiting for the bounce. There must be a bounce. And I'm going to catch that bounce long. Just like I had it short. I had it done perfectly short. And then I listened to Sheldon. But I'm not going to blame anyone. I'm going to come back. I'll be back. Give me a day or two. I'll be back. All right. I'll see you guys again tomorrow. Until then, have fun.
When can I trade with you?
What do you mean? Trade?
I want to trade. You guys going to fund my account? You said you'd fund my account.
Guys, what do you think? Should I fund Jimmy's account? Fund it.
I see lots of yeses here in the comments.
Should we fund Jimmy's account?
Yes.
I don't see anyone. I don't see any yeses in the comments. Not even one. Not even one yes in the comments. No, look, no, 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 no. All right, Jimmy, I'll find your account. Give me your account number, Jimmy. What is your account number, Jimmy?
I'll DM you.
Like your account number, Jimmy, and I'll find your account for the trading competition.
Woo-hoo, thank you.
God, now I have to compete with another one of them. All right, people. Oh, tomorrow I'll find some more accounts. So remember, if you haven't signed up today. Put $250 into your account, and tomorrow I could be funding your account. Yeah, I'll fund tomorrow. I'll fund 10 accounts live on the show. Right now, I've got to go because I've got to go get to crypto school. We're shooting Sheldon's crypto school. So exciting! Sniper school. We're shooting it. See you guys again tomorrow. Until then, have fun, trade well, my good friends. Not mean to funding your account like that. You sabotaged the show and you made everyone feel sorry for you, man. People say whoever's in charge of the sound should be restrained. What's wrong with my sound?